Hey, digital investors, what is going on, everybody? Hope you're all having a great day. Welcome back to another video where we go over everything that is going on inside of the crypto space. We have some good stuff to go over today. Today's probably going to be a pretty chill video. The market, for the most part, is still up and still in the green for most coins here that we are looking at. So hope you guys are all just enjoying the gains, enjoying where we are in this crypto cycle, because it has been a long time waiting for where we are now. If you're new to crypto, make sure you continue to learn as much as possible and try to familiarize yourself with where we are in the cycle. So we're going to go ahead and get started. The price of Bitcoin today is at $59,749. We have Ethereum at $2,100, Binance Coin at $495. XRP at number 4, flipping back some coins that had previously flipped it at $1.35. It is nice to see it holding above the dollar range, and we are up 133% in the past week. We have Polkadot at $41, Cardano at $1.25. Litecoin is at $248. Uniswap is at $30. Chainlink is at $33. We have Theta at number 13 at $12, followed by Bitcoin Cash at 12 at $6.77. Stellar has been on a run too, kind of following what XRP is doing at 59 cents. As we know, Stellar and XRP love to run in tandem. So the markets are looking nice today. We're going to hop into our first piece of news. We have elite class of crypto assets will outperform Bitcoin, says Raoul Pal. And I've been watching what Raoul Pal says very closely recently. He's been saying some interesting stuff. I showed you guys one of his tweets where he said that there's a whole new world out there that looks a lot like Bitcoin in 2013, and he's mainly talking about these utility altcoins. So it seems like he is one of the people who I think sees the bigger picture, that the cryptocurrency space is much more than just Bitcoin, and we are literally investing in assets that will make up the internet of value and the internet of things. Before we hop into this, also want to let you guys know to check out the Patreon. A link will be in the description below. I created it a few days ago. The private community is probably going up either today or early tomorrow. So the private community will be up. The first video is in there, and our first altcoin gem deep dive will be up in a few days. So if you want to check out what we're doing on Patreon, highly recommend you guys join. I'm looking very forward to putting out some awesome content in here. Check out the link in the description. And with that said, Macro Guru Raoul Pal says a select group of crypto assets will inevitably outpace Bitcoin's growth as the market matures. He says it's fascinating to see that since inception, ETH has outperformed BTC by 250%. It only fell below its initial price in BTC for the first 5 months of its existence in 2015. He says, I thought this was very interesting, let that put rest to the idea that all other tokens trend towards zero in BTC terms. Now, what he's talking about is you have these coins, right? You have Ethereum, Cardano, XRP. Obviously, we all know about the USD value of those, meaning like we can, check CoinGecko and we can see, all right, Ethereum's trading for $2,100. But there's also the BTC value where people value these coins against Bitcoin. So in Ethereum, and this is not correct, but say in Ethereum was 1,000 Satoshis, and it's well over 1,000 Satoshis, but just for sake of example, in Ethereum, in regards to BTC terms, Ethereum could be, say, 1,000 Satoshis. And what a lot of people point out is they say, in the end, all altcoins trend to zero against Bitcoin, meaning Bitcoin just gains in value and these altcoins ultimately diminish in value against Bitcoin. So a lot of people say, you're better off just holding Bitcoin. And now, he's one of the first people I've saw who is big, who is pretty much, kind of mainstream, saying something like this, putting forth an idea like this. So really interesting stuff. I'm going to continue to follow Raoul Pal and I'll let you guys know any interesting things that he says. He says assets that obtain network effects, which is when an increase of participants improve the value of a good or service, will rise in value against Bitcoin. He says tokens that fail to get network effects trend lower. Tokens that achieve ecosystem network effects like active wallets, developers, and apps will likely rise in Bitcoin terms over time. The art is in choosing which will get network effects, and that ain't easy. Hence why I chose a basket, right? Yeah, because it's very tough to predict the one cryptocurrency out there that is probably going to, have that adoption, have that network effect. So by investing in a handful, right, a basket of cryptocurrencies, we kind of, we assume a lot less risk. And with the nature of how much these crypto digital assets can increase, picking one or two bad tokens out of a basket of 10, your ones that you picked that are good, they will outperform the bad ones so much that the loss it'll be negligible. So he believes the entire crypto space is set to balloon, previously remarking that the overall crypto market cap will likely double after surpassing the $1.8 trillion market cap. He says the market cap of the entire digital asset space feels like the break of 1.8 trillion is kind of a big deal. The chart pattern suggests that acceleration lies ahead on that break. My guess is the whole space doubles in the next 2 to 3 months. Let's see. That would be pretty insane. What would happen to your crypto portfolio if it doubled? How would that change your life? And I got this weird feeling that we'll probably see our portfolios more than double by the time this bull run is over. So Raoul Pal says within the next 2 to 3 months, a doubling of crypto. Pretty awesome stuff. Also, I thought this was interesting. Crypto trading on Robinhood spiked to 9.5 million customers in the first quarter. This is pretty crazy. So they say it's been a big year for crypto, and Robinhood shared some stats today, providing more evidence that the crypto boom is more than just hype, at least for now. Robinhood's head of crypto operations revealed that in the first quarter of 2021, 9.5 million of its customers traded crypto via the company's platform. That's up big time from the 1.7 million customers who traded crypto in the 2020 fourth quarter. Okay, so from 1.7 million in the 2020 fourth quarter to 9.5 million in 2021 for the first quarter of 2021. That is a massive increase, which we could probably say is due to the rising prices getting people in, right? Whenever crypto prices go up, we've seen it every cycle. Every time these crypto assets start to make new all-time highs, a new wave of investors gets in. It grabs their attention. We also have Bitcoin miners are stacking coins, which is a positive sign for the market. Blockchain data shows that miners are accumulating coins and adding to bullish pressures in the market for the first time since December. If you guys are enjoying the video, make sure you tap the like button. It helps a ton for the YouTube algorithm. And we have analytics firm Glassnode, their miner position change metric, which gauges the 30-day change in the supply held in the miner addresses, recently turned positive in a sign of renewed holding by those responsible for making coins. So basically, the miners, based on data, look to be holding their coins right now, which is usually a good sign. The balance held in miner wallets has increased by 4,435 Bitcoin to 1.806 million over the past 2 weeks. So they are hodling hard. Miners now have a net accumulation of liquid assets as they have enough cash in reserve to run their future operations. Having liquidated holdings when the Bitcoin price was between 20 and 40,000, or most of them are holding in anticipation of a price rally. So really interesting stuff. Yeah, usually these miners, right, they're not going to hold their Bitcoins unless they're very confident that they will be able to sell at higher prices. Because if they're mining those coins, right, that's costing them money to mine those coins. And so if they're selling them for less, they're not going to do that. So for me personally, and what most people come to the conclusion to, is that when these miners are holding Bitcoin, that usually shows us that there's a lot of confidence that Bitcoin is probably going to increase in value. Otherwise, they would be selling them as soon as they get them because they definitely don't want to sell in a loss. We also have Bitcoin on-chain data suggests no bull market top at 60,000 and that selling activity is declining. So if we have sell activity declining and miners are not selling their Bitcoin immediately as they mine them, this could be some really bullish stuff. And you factor in the halving that has already happened, so the supply is already cut in half. It's looking pretty crazy. For the first time in a Bitcoin bull market, not only are long-term investors, but also short-term speculators who usually add to the daily sell pressure toward the end of a market cycle, have become increasingly confident of higher prices as they hold on to their Bitcoin. This only adds to the already existing supply shock. If demand remains strong, this is a recipe for another leg up for the BTC price. Absolutely. And they go on to say that Bitcoin selling activity is declining again. And they go over some charts that kind of show that. The metric that they're using here is called hodl waves, which is the length at which each Bitcoin address holds Bitcoin before they are sold into the market, is clustered into terms of buckets, and then they are visualized in different color bands. This indicator does not only suggest that the current selling activity is not at a typical bull market peak yet, It even reveals that for the first time in Bitcoin's bull market history, this trend is declining while the price continues to rise. This is a very unusual trend in a bull market. Assuming that the price peak has not been reached yet, this suggests that profit seekers, whether they are short or long-term focused, are starting to hold on to their Bitcoin again, expecting higher prices to come, and by that adding to the Bitcoin supply squeeze on exchanges. So really interesting stuff, right, guys? I mean, you take in the halving, you take in that short-term speculators and long-term investors are holding their Bitcoin right now based on the data. We have miners who are stacking their coins, right? And we take into account that, Robinhood spiked to 9.5 million customers in 2021, and cryptocurrencies are expected to continue to rise in popularity. It just kind of makes you wonder, how high can we really see prices go? Can we really see this thing squeeze? If all this is happening while we have a retail mania come in and we have institutional FOMO going on, this could literally turn into a bull run, the likes of which we have never seen. Now we can also move on to XLM and XRP, which have been doing amazing. They surged 20% while Bitcoin and Ethereum kind of stagnate, going sideways. XLM has surged by 20% overnight to reach 63 cents a coin. The last time XLM crossed 60 cents was very briefly back on February the 13th, but for the 3 years prior, its prices stayed below 50 cents. In fact, the last time XLM traded above 50 cents was back around the time it reached its all-time high of 93 cents back in January of 2018. Very excited to see XLM get back above its old all-time high of that 93 cents and go for new all-time highs. Very excited to see what happens with XLM this cycle. XRP, the coin of the other project of the American crypto entrepreneur founded and was CTO of, they're talking about Jed McCaleb, Ripple, their XRP token has also surged 20%. At the time of writing, XRP is valued at $1.42. Confidence in Ripple is once again growing after its succession of small courtroom victories against the US SEC. I even saw a video from BitBoy, probably everybody saw this video from BitBoy Crypto, where he has even jumped back on the Ripple XRP bandwagon. So I think this is definitely has some level of accuracy to it, right? The confidence in Ripple is once again growing after their SEC. They haven't won against the SEC, but the way the course is going, if you're following it, they keep getting these small wins. It looks, more so like the SEC is failing to prove that XRP is a security. Overall, things are just kind of looking really good for Ripple, and I think it has people who prior to this lawsuit weren't really that deep on Ripple and XRP, weren't that educated about. I think a lot of people just said, "Oh, SEC lawsuit, they're getting sued. Well, that's the end of Ripple and XRP." But if you actually went through the documents, did your research on it, you could kind of see like it was bogus. Anyone who has researched XRP for a good length of time, I would say, you could kind of see that the stuff that the SEC was accusing was just not correct. It was just, you could tell they just didn't know what they were really talking about. They needed to be properly educated, which is what I think we're seeing now. We have billionaire Mark Cuban believes that Bitcoin will replace gold on a massive scale. Mark Cuban anticipates Bitcoin will chip away at gold's supremacy as a store of value asset. Bitcoin's great as a platform, and this is what Mark Cuban is saying. So he says, Bitcoin's great as a platform. It's accepted now. It's an alternative asset. It's going to replace gold in the portfolios of a lot of people, and that will hopefully push the price up as long as the whales continue to hold. But that's a different type of platform. Its real utility only happens when you wrap it, at least as of now. You're starting to see these ETFs pop up and ways for people to buy it. It's too difficult still to get money into a wallet just to buy Bitcoin. So you need to have somebody that you can work with that is going to hold it for you. I would disagree, but let's just continue reading what Mark Cuban has to say. Because most people are going to be terrified of having that Bitcoin in their own custody. I can get that, right? Most people, they are going to most likely opt for someone else to custody their Bitcoin. Just always remember, if it's not your keys, is it really your crypto? In reality, it's kind of not. The key holder is the true owner of that crypto. And he says, so until that's simple, people are going to want to buy it through traditional means, through their broker or through Robinhood, even Coinbase to a lesser extent. But just that process of going through the KYC, AML stuff and connecting to your bank, it's still too much of a hassle right now. It's just easier for people to deal with a stock brokerage. But as there is more and more opportunity for people to buy from people that they already have their savings with and their retirements with, you're going to see it chip away at gold, because the reality is gold is sold off of a narrative just like Bitcoin is, and it's really built on trust. Do you trust gold or do you trust Bitcoin? Younger generations are going to trust Bitcoin because gold has no utility in and of itself. What is gold good for? It's good for nothing. What do you guys think about that, right? Mark Cuban coming at gold pretty hard. Yeah, I don't think gold is good for nothing by any means, but let me know what you guys think below. I also always take what these guys say with, a very small grain of salt, right? Usually they are trying to manipulate you for their own agendas, right? Which we have seen time and time again inside of the crypto space, where an institution or a public figure will say something negative about Bitcoin, only for us to find out that they bought the dip that they created. So, and right now we are seeing a lot of people just talking a lot of smack about gold, and it just makes me wonder, like, should we be buying gold right now? When everyone is saying that people are running from Bitcoin to running from gold to buy Bitcoin, and gold has no utility, it makes me start to question that. We also have from the U.S. Intelligence Center, they say prepare for uncertain future of money. This was pretty interesting stuff. America's National Intelligence Council, a mid and long-term strategic planning center, has issued a warning to the USA and its allies about threats to the dollar and the euro from stablecoin projects and privately issued digital currencies. In its latest report named Global Trends 2040, A More Contested World, the body claimed that the private sector coins and other non-state issued coins could add complexity to the conduct of monetary policy by reducing countries' control over their exchange rates and money supply. The authors noted that China would likely emerge as America's biggest rival, with greater contestation in store at every level, including 4.0 industry tech. The authors did not mention crypto assets like Bitcoin by name, but they did name check's Facebook proposed Libra project, which is now Diem, and they name dropped the Chinese digital yuan, as did other central bank digital currencies, or CBDCs. In a section named The Uncertain Future of Money, the financial sector is not immune from the technological changes that are transforming other industries. Digital currencies are likely to gain wider acceptance during the next 2 decades as the number of CBDCs increase. They added that should Facebook and other countries succeed with token rollouts, this would further drive acceptance of digital currencies, but indicated that regulators could play a crucial role. The report says that the extent to which privately issued digital currencies will provide a substitute for the use of national or regional fiat currencies, including the US dollar and the euro, to settle transactions will depend on the regulatory rules that are established. These privately issued digital currencies, the authors said, could add complexity to the conduct of monetary policy by reducing countries' control over their exchange rates and money supply. Over the course of the next 2 decades, they say several global economic trends could plague international unity, including rising national debt, a more complex and fragmented trading environment, and the global spread of trade and services, new employment disruptions, and the continued rise of powerful firms. Pretty crazy stuff, guys. Pretty crazy stuff that's coming from the U.S. Intelligence Center. Let me know what you guys think about that in the comments. Our fear and greed index for today is in greed. It's 76. We already went over prices, so I will not do prices again. So that's our fear and greed indicator. So with that said, guys, that is the video for today. If you enjoyed it, make sure you tap the like button. It helps a ton to push this video further in the YouTube algorithm, get it out to more people. Also, if you like daily cryptocurrency content, I go over Bitcoin, altcoins, and everything going on in the crypto space, then subscribe and hit the bell so you're notified every single time I put out an upload. Also, keep in mind, I'm not a financial advisor, and this is not at all financial advice. I am just having fun documenting the daily crypto news and this crypto bull run and building an amazing community with you guys. So with that said, I will see you all on the next one. Have a great day, everybody.